I am super excited for this program today. I have a good friend and excellent SBA lender in Stan Lamb with Pinnacle Financial Partners. I'll let Stan give a little bit of an introduction in a minute here, but this topic is super important for those who are buying a business. SBA loans are very misunderstood. And so consistent with all of our other webinars, we want people to be educated. We want you to be prepared so you have a better chance of success when you are ready to buy that business. There are a lot of details that go into this, and there are a lot of requirements, frankly, from your lender, but also from the SBA, the government. And the reason is these are such phenomenal loans for buyers and great ways to buy a business. Just one sort of reminder, today we're really focusing on SBA loans. The loan is one portion of what you as a buyer have to be navigating. There will be a due diligence part of the transaction, and there will be a legal component. But today we're really just going to focus on the loan. And again, I'm super happy to have Stan Lamb. Stan, you want to give a little bit of background about yourself and how you got into this fun world of SBA loan work that you do?
Yeah, well, thank you, Adam. I really appreciate you having me here today and give me the opportunity to reach out to folks and educate them just on the basics of, an SBA, transaction, kind of from start to finish with a, business acquisition transaction. I've been in the SBA world. I won't tell you how I got started in it, but, it was, started out in banking, but been solely SBA lending for over 20 years, working with borrowers with all types of transactions. I would call myself pretty much a generalist. I've seen every type of transaction out there, but do focus on business acquisitions, or we call them in our world, change of ownership transactions. So been around it for a long time, been in this market my entire life, and just really look forward to, helping, small business customers, move forward with their dreams and move on to the next stage of their lives.
Well, great. Well, let's jump in. I'm going to pull up the presentation now. And so here we are. So first of all, a little bit of a disclaimer. Everything here is for education and information, but these concepts apply to individuals looking to buy a business, and is really, again, focused on the lending process, which I talked. This is not about how to buy the business or due diligence or the legal process. We've got other webinars for that. So real quickly, I'm not going to read through this, but this is the overview. We're going to talk about from thinking about buying a business all the way to the end, where we're going to come back and talk about some of the mistakes to avoid that we commonly see from my seat, the broker side, and Stan from the lender. Stan gave a quick overview. I'm just going to give a real quick overview for those of you who don't know me. My name's Adam Petrikoff. I'm the managing partner of the VR business brokerage office here in Charlotte, North Carolina, and we work throughout the Southeast. So super excited to continue these monthly webinar series called Contemplating Your Exit. And today we're having, as we discussed, Stan Lamb and his perspective from an SBA lender. So let's move right into it. You are considering buying a business for all kinds of reasons. You had a bad day at the office. It's been a long-term dream of yours. You may have recently been downsized, or maybe you're moving to a new market. There might be 10 other reasons. What we always tell people is really understand, why are you considering buying a business? It is not a casual endeavor. I always tell people owning a small business is full contact sport. If you're not prepared to be in it 24/7, 365, get a job or get into real estate or something more passive, because this is you got to put your energy into this business. You got to be ready, and you got to really understand where you are in life, because maybe you just had 2 kids in the last 3 years, and maybe that's not the right time. You might need to be spending more time with your family and maybe building up your cash reserves. Stan, when you start talking with buyers about buying a business, what from a lender's perspective, what are you looking at?
Yeah, thank you, Adam. That's the primary thing. They're going to come to a lender, first of all, to see what can I afford. When you go to a lender to look for what can I afford in the, as far as a mortgage for your home, that's probably one of the first major purchases that you go through. You're going to a lender for advice and what can I afford based on my financials. So we're going to look at financial capacity. That's one of the primary drivers of what we do. But in a business acquisition transaction, we have to look a little bit further. There's a little bit more subjectivity to what we look at. And that goes into your prior life, your prior experience, your management level of what you can kind of move forward to, with buying a business, what fits your background. You got to have that sort of transferable experience is what we call it in our world. And those are the two major components that we look at when we're pre-qualifying an individual for a transaction. And we'll talk about that as that's kind of really the first phase that we jump into, once you've kind of identified and you're kind of moving down that path that you are going to take this leap and move into, purchasing a business, managing employees, operating something that, really will take, like you said, Adam, 24/7.
So we're not going to go over every one of these bullet points here, but I want to just stress having family support is it's not valuable, it's essential. If your spouse or partner or other parts of your family are not on board and supporting you, this idea of buying a business is not going to go forward. You need your family support. Okay, so let's dig in. They say, okay, I want to buy a business. Where do we begin? Stan, I'm going to let you sort of take this one here and jump on in.
Yeah, thank you, Adam. I think you hit the nail on the head first and foremost. I mean, you have to have that family support. So you got past that stage, you talked it over with the, whoever's essential in your circle, that's important. And so now you're ready to move forward. You may have had some look at some stuff online, whatever, you have an idea that I'm going to jump into this world of, owning your own business. So the first call that, we typically see on our side is you want to reach out to a commercial banker, someone that within your lending institution that has experience with business lending, type background. Specifically, if you're talking to us or talking to someone such as Adam, or you're looking online at some other services and so forth, you want to talk to someone who has experience with business acquisition transactions. And when we talk about that in this world with first-time, buyers of a business, more than likely, I'd say, 80% of the time, maybe 90% of the time, you are going to fall in the realm of SBA lending. Because I will tell you, I've worked with a multitude of commercial lenders, large and small, and anything that's dealing with your first time and goodwill is going to require some sort of, SBA guarantee. And look at it as an SBA guarantee as an insurance policy that the bank is going to receive for making this loan that secures 75% of the transaction, or I would say insures 75% of the transaction. So a lender can get comfortable with goodwill financing. They can get comfortable with the first-time buyer, meaning first time an individual is buying an existing business. We got a business, someone such as Adam has brought them to the table. They may have pre-qualified that business with us, the lender, but you as an individual need to know what your financial capacity and what your background can push you towards. And so I think that's really important for you, to understand. So what are we going to ask as a lender? We're going to look into, first of all, okay, what industry are you trying to go into? What are you trying to follow you've left the corporate world, or you got a second stage of life that you're going to move to something else. Maybe you have owned another business in the past and you're looking for something else. You've semi-retired, you're ready to get back into it. There's a multitude of reasons of why someone may want to get in, to purchase, an existing business. But there comes into play of, what is a lender going to provide you? How much money do you have to put down as a down payment? That's your financial capacity. And that's where having that first conversation with your commercial lender kind of steers you towards, okay, maybe this looks like an SBA type transaction. And I will tell you, when you're talking to a commercial lender, you want to talk to someone that has experience with SBA lending. So maybe your contact that you talked to initially is not the SBA person such as myself. Maybe they are, but you want to make sure you're talking to the right person within that institution. You can go online and find out who the top SBA lenders are in your region and find out that information, and you can look at the top ones. They typically have a dedicated shop that's going to help you through the process, and that's who you want to look for. If it's a lender that's, you know, maybe booked a couple SBA transactions a year, maybe that's, you know, maybe they don't have as much experience in that field, and you want to work with someone that has, you know, a pretty good background in that, has a dedicated shop, and more importantly, a preferred lender with SBA. So ask that question. A preferred lender is important to work with them because they typically have a dedicated shop to help you throughout the process. Questions that I typically receive, you know, on the front end and so forth is, you know, of course, just like any, you know, loan, rate, term, collateral, guarantees, okay? Any transaction we're gonna look at in the $5 to $10 million range, a lender, whether it's a commercial, you know, conventional loan or an SBA type transaction, we are focusing on SBA today, but regardless of the transaction, banks are gonna ask for personal guarantees. That's essential to a transaction, so go ahead and understand that you're gonna go, you know, 100% in, full personal guarantees in any type of transaction, conventionally, or, you know, SBA in, you know, under the $10 million range. 25% rule we talk about, that refers to collateral. I'm going to give you this little rule right here, and something that you need. It kind of goes with family support. SBA requires for any unsecured exposure that they finance, if you own or have 25% or greater equity in your home or any real estate, you will be required to pledge that property as additional collateral as part of the SBA's policy and procedures, okay? So that, again, that goes back to family. You typically own your home with a spouse, so you might need to have that conversation. If, you know, you own a home that has a good amount of equity in it, sometimes you may go out and use an equity line to use for down payment, and there's different caveats. We could get into that if we had a more, you know, specific conversation, but just understand that that rule is in play. It's something you need to know about from the very beginning as you go down an SBA, you know, transaction. You know,
let me jump in right there, because that's always a big topic, and we get asked all the time. Give you a chance to catch your breath there, but let's, you know, we lose a lot of buyers when they realize, or their spouse realize that, hey, wait a minute, we got to pledge our house. Can you just go over that one more time? Just really how this is not necessarily what Stan's bank looks at or another bank looks at. These are the requirements of the SBA. So Stan doesn't have a choice. If they want to get the guarantee, these are the rules they have to follow. So if you could one more time, just go over that, because it's a very big and important topic.
Adam, I wasn't exactly sure how far you wanted me to get into this, but I actually think we should go over it again, because it does. It's literally the first conversation I have with every potential buyer looking to buy a business with goodwill. And I have that conversation with everybody on the very front end, okay? And like Adam said, this is an SBA rule. It's not a bank rule, okay? And the SBA is very specific with this. If you own real estate, and that could be your primary property, that could be a rental property that you own in an LLC, and if you own it with your spouse 100%, either your primary residence, a commercial property, or let's say a residential rental property, and it has greater than 25% equity in that property, okay, then you are required to pledge that property as collateral until the unsecured exposure has been covered. So you may own 4 or 5 properties, 2 properties takes care of the unsecured exposure, then you do not pledge the other 2 properties that you own. So individuals sometimes can go out and get an equity line. Sometimes they're going to use that for equity injection. Sometimes they're going to get a home improvement loan prior to, you know, taking out this SBA transaction. In some cases, you can use your home equity line of credit for equity injection into the transaction if you have a secondary source of repayment for that equity line payment, okay? And that secondary source of repayment would be something like your spousal income, maybe another business that you own. So there's some caveats around that. We could get specific on that, but understand that that's a big question that gets asked from the front end of transactions. I've seen folks that have properties they own free and clear, you know, and it may be, you know, $500,000–600,000 home. And so, yes, we will take that as additional collateral for our transactions. And if I have a client on the line and they say, well, I'm just not going to pledge my home, that's just not going to happen, it's kind of into the conversation with SBA lending. You know, if that's your position, then unfortunately, I have no way to bend in that regard, okay?
Yep.
So just kind of keep that in mind. But Adam, I'm glad we touched base on it because it's literally, I have the conversation every day.
Yep, 100%. And that's why I wanted to focus on that. So you've had an initial conversation with your commercial lender. You know, we're big believers in finding the right fit, not just a fad. You want to have something that's going to be around that you can buy, you can have for maybe 5, 10, 20 years. So talk a little bit about this, what we've got up here, Stan, and when they should get you involved in the process.
Well, hopefully this is probably, you know, finding the right fit. Hopefully this may be the second conversation I have with a client. Maybe I've had the initial conversation like we just talked about in the prior slide. This conversation is more of, okay, you've worked with a, you know, business advisor. They kind of steer you in the right direction. You kind of got your eye on a couple different, you know, businesses. Maybe you've narrowed it down to one, and now you brought that business, or maybe I've already seen this business and maybe I've already pre-qualified it with someone such as that. And I've looked at the financials of the company and go, okay, this business will support X and they're going to sell it at X, and that all works great. Well, that's only half the transaction. We got to find a buyer, and that's where the marriage comes into play. That's where we have to look at the business, what it takes to operate that business on a day-to-day basis. And we look at the buyer and their experience and their level to see how that marriage works together for a bank, and how can we get comfortable with that marriage or that transferable experience and the financial capacity that buyer can bring to the table. So that's something that I'd say before you sign an LOI and you start negotiating, you know, the fine details of an LOI, you come to the bank and say, Stan, I'm looking at this business. You told me a couple weeks ago or a couple months ago, sometimes it takes time, that, you know, I'm qualified for $1 million, you know, transaction. This is about $1.1 million. Okay, well, let's talk about it. Where are we? It's been a couple months. Where are you financially? Has anything changed there? Good, bad, and different? Stock market up, down, whatever. How does that affect you? So, you know, we kind of look at all those attributes. We take that information together, and then we're going to pre-qualify the transaction. We'll go into that a little bit more in the next slide, or next couple slides. But so that's kind of what we're looking at the transaction, okay? But I kind of want to get into this thing about when we see transactions and we see information from a seller, we get financial statements. You know, we get QuickBooks, and they say, Stan, these are their numbers. They're doing great. And I can look at them straight in the eye and I go, yeah, they look like they're doing great. But just understand the financial statements are only worth what they provide. And if they're reviewed financial statements from a CPA, okay, great. That's good. That means that a little bit more, you know, work has been put into, you know, reviewing these financials. But tax returns are king. And all SBA loans are underwritten and approved and closed with tax returns in the file. So until I have those tax returns, I really don't give a lot of work to the deal yet, you know, because I really need to understand it from what they reported to the federal government. It's a federal backed loan. Therefore, we're going to look at, you know, federal tax returns that have been submitted to the IRS. So keep that in mind as you're looking through stuff. The tax returns are king, and I think that's why we kind of highlighted that one there. Also, when you're going through the process, you know, you've found that business, you know, the price of that business has changed as far as what we pre-qualified you at, and you're moving to a larger, you know, transaction, like I approved you for $1 million, now you're 1.1. Bring that into me. Let me understand that, you know, immediately before you go into that LOI. I'll take that information, discuss it with my credit team to make sure we're on board with that size of transaction. If it's lower, okay, it's probably, you know, not a deal killer or anything in that regard, but, we want to make sure you're always staying in constant communication with the lender. One thing I kind of really want to bring out is the business plan or your outline of this process, of this journey that you get ready to go through. You're going to start, you've made a decision that you're going to go out and buy this business, and you've outlined a couple of things. You want to stay in this sector. You understand that you can qualify for X. You need X amount of dollars to live off of, or you have an idea of your target market. And so there's 5 bullet points, let's say, that you put out on a piece of paper. Then as you're going through this process and you're working with the business advisor and you're narrowing it down to industry businesses that you go through, you want to update that business plan. It is a working document from day one and until you buy the business, until you expand your business. It is a working document that you need to prepare for now and start putting that into place, because we're going to need a document prior to underwriting for us to move forward. And it's a very important part of the process. The next part, we'll kind of go into the 3 phases. There's 3 phases of my process. It's pre-qualification, underwriting, and closing. It basically boils down to those 3 things that we work with on day to day.
Okay.
Adam, did you think about your 3 process steps?
Yeah. Well, I wanted to take a step right here and say, as a moderator, I get an F, because I meant to tell everybody, if you have any questions, feel free to put them in the chat. We will answer them at any time. So please put any questions in there or in the Q&A section. Be happy to integrate them in, Stan, so you don't forget your question, but feel free to do that. The other thing is, we're about to get into the meat of it. So you've sort of had your pre-conversation, you found a business, Stan's pre-qualified you, he's pre-qualified the business. This is sort of all the pregame. Now we're about to get into the action. And one of the things that I always like to highlight at this point is, it's really important as a buyer who's looking to buy a business. We're highlighting the 2 things we're featuring today, you, the buyer, and the SBA lender, played by Stan Lamb today. But there are other people in your world, or should be in your world, as you go through a transaction. You're going to need an attorney. You're going to need a CPA. You're going to need a family support. We talked about that already. You're going to need an M&A professional to help guide you through this. And obviously that's what we do, and others. And I encourage people to talk to others who have done this before. No one can give you experience to go through something for the first time like someone else who hasn't gone through this or who has gone through this before. And we've had past buyers in our webinar series. We had one last month. You're looking to buy a business. Talk to someone who recently bought a business. It's invaluable what you'll learn. This is not the time to let your ego speak. You need to have a team of advisors, because mistakes here are big, they're costly, and many times they can be permanent. So please make sure you have and engage with your advisors sooner than later, particularly as you go through this buying a business process. So moving on here, Stan, we've pre-qualified. We're at the pre-qualification stage. Talk a little bit about where we are here and what you're going to need from a buyer at this point.
That's right. So step 1, that's pretty much speaks for itself. I will tell you, I probably pre-qualify at least 1 business a day on the daily. I get calls from borrowers, some that I work with, some that have been referred to me, from different type of, internally within the bank, whether it be, business advisor, et cetera. Most of the individuals I speak with have talked to someone else. They have talked to another SBA lender, conventional lender, and that's what you should do. You need to vet it out with more than one lender. And I'm one talking here myself, but if I was going to purchase a business, I would do the same thing. So I think that's crucial that you kind of look at other, lenders out there that specialize in this product. I will tell you that the product that we offer in this transaction is somewhat cookie cutter. It doesn't vary very much from lender to lender, but you want a team or a lender that has a group that has a dedicated, program towards this, this product that, is going to provide, this financing instrument, to purchase this business. I think that that's important, that you got a team. It's a preferred lender. I will say that again, that is very important that you work with a preferred lender. There's be some caveats that are different, maybe the rate, maybe how they structure certain things of the transaction, how they work with working capital and that sort of thing, maybe a little bit different. But at the end of the day, we do provide, pretty much the same product, because it is, adhered around the SBA program, which is a specific program. We have policies and procedures to run. So when I get that call from the borrower, the buyer, there's basically three things I'm looking for. Okay. And I can pre-qualify about any transaction in this regard with these three things that I'm asking for here. There may be some additional information depending on your personal situation, but these are the three things: personal financial statement, tax returns, and a management bio on the buyer. Okay. So personal financial statement, it's got to be current and it's got to be detailed, meaning, if you got car loans, credit card loans, student loans, include it on the document. If you have, stock and, marketable securities, include it on the document, include a schedule. I have a lot of folks, our form is a Excel form, which is great because you can create another tab and you can break down kind of the detail, of your marketable securities, your IRA. If you got crypto, banks want to know about that. Banks are starting to get on board a little bit with crypto. We're still a little bit, hesitant about that, a little bit more risky, in the bank side. And you got to think we're a little bit more, conservative in nature than that. So just kind of keep that in mind. But we are starting to see a lot of that recently. And so just keep that in mind. But detailed personal financial statements, very crucial. Keep it updated. Anything changes, you got it, and you can provide it on the fly. 3 years personal tax returns. You think, hey, personal tax returns, what does that mean to me now? First of all, it's a requirement for SBA. We have to have 3 years tax returns, but it does provide some insight on your prior financial capacity, what you brought in, what came in the household. It also tells us if you own other sub-S or LLCs and so forth. So we can kind of see if there's anything else out there that we can kind of ask for. If you do own another company, then, we're going to ask, we need the same information for that company as we would, say, the company you're purchasing. You got to have 3 years tax returns, current financials, debt schedule. We got to analyze that company. Is that company losing a ton of money and you're looking to buy another company? Yeah, that may not make sense, or does it put off a lot of cash? And so maybe it's a strategic acquisition. We need to know that. So that we get that information from personal tax returns. And some other stuff that, we have, probably not as critical, but it's, if you just came from a W-2 type job and that's it, and that's all you had. And sometimes I'll have that conversation with the borrower and go, okay, what's your income? Has it been consistent over the years? We can kind of roll with that. The next thing is the most important to me, really, other than your financial capacity, which is in your personal financial statement, is your management bio. And this is where I have a deep conversation with the client to say, yes, you can provide your resume, your CV, you can provide that detail, but a bio can kind of give me a more current picture of what you're looking to do today, because you can tailor it towards the industry, the sector, the niche, whatever you want to go towards. You can tailor that so it looks a little bit more attractive to a lender, and what your prior responsibilities were and how that translates into, a certain business that you're looking to purchase today. So I think that's critical, that you really spend some time on that, because also you can provide that in an email, a Word document, or whatever, but you can also incorporate that into your business plan, which is something we're going to need, as part of the whole application process. And again, if you change businesses, if you went from, one industry or one just a little bit over, you can kind of tailor it around that. And that gets the lender a little bit more comfortable level, because you're able to kind of sell your attributes to what you've done in the past and bring it forward to what you're trying to do today. Okay. So typically I have the information from the business. So that's half the puzzle. Then I have your side of it, and then we're going to pre-qualify those together. Okay.
Before you go in, Stan, before you go from here, when we get to a letter of intent, I just want to sort of provide an observation. You got to come clean with your lender. If you've had, past felonies or past bankruptcies or past DWIs, you name it, they're going to find it. So this is not the time to hold back. Stan and I have worked on deals where things have been held up because of situations that weren't necessarily disclosed at the appropriate time. So it's your lender. They're getting ready to give you a lot of money. You're going to have to come clean. And most times they can work with you, not all, but that's just my one sort of observation. So Stan, the buyer now has a letter of intent. And I know because we see it from our side, they're so excited. Great, we got this under an agreement. We got a 3-page non-binding letter of intent. I tell them we're just getting started. I tell them we've got to go through the legal process, the due diligence process, the financial process. And again, we're just talking about the financial and lending process. So let's take it from lending, letter of intent all the way through closing over these next couple of slides. And again, if you have questions, please feel free to put them in the Q&A or the chat. Go ahead, Stan.
Exactly. So you have an LOI in hand. Part of my application process to underwrite the SBA transaction is that I have to have a letter of intent or a purchase agreement in my file before we can physically underwrite the loan. In addition to that, what also takes time is I have to have a business plan with projections and assumptions. I can see the application. You can fill that out in 30 minutes tops. But these two items take time. The LOI takes time to put together, to put out, the different type of caveats within that the buyer and seller agree to. The business plan, projections, and assumptions, that takes a little bit of time. That's why I've told you to already, begin working on that, prior to this stage here where you're ready to submit that. So typically, 60 to 90 days after LOI is signed. So keep in mind, typically we can close a simple transaction in about 60 days. But if you sign an LOI, today on June 1st, but don't give me my package until June 30th, then, your June 30th is when the 60 days starts. Okay. So keep that in mind, because a lot of times, there's been many times that I've, sent out a underwriting checklist with instructions on Friday afternoon or Saturday morning or early Friday morning, just so I give my borrower time to work on it over the weekend. Because we know we're all busy in life and that sort of thing. You just have to carve out some time, on the weekend and so forth to maybe get it knocked out. And maybe during the week or whatever. But the underwriting checklist, is crucial, because an underwriting credit memo for an SBA loan is probably, just for a simple business acquisition transaction, is 15 to 20 pages. That's what the SBA asks our credit advisors to put together for every SBA transaction. So understand there's a lot of meat, narrative, financial that goes into this report. So we need this information that's kind of detailed out here. We talked about personal financial statement. We talked about the application. That's filling it out. You're also at this point in time need to identify your operating entity. Have you formed your operating entity, your tax ID number, your bylaws, your operating agreement? That would be a good time to get this knocked out prior to this. If you're getting an LOI stage, go ahead and spend $300 with your attorney or whatever it costs to get that form, because that drives everything we do. We cannot pull, an SBA approval from the SBA through our preferred lending status without this information. So get it done, get it out of the way. A good business plan goes a long way with underwriters. If you give me just 3-page business plan and it's just, a little bit of information, no meat and potatoes, underwriters are going to be like, what are they doing here? Okay. You give us a good business plan that understands, what you're doing, how you're going to operate this business, how this business has been operated is crucial to the entire transaction from our standpoint. That business plan also goes into, and I tell my clients, I may pre-qualify a transaction and I'll put, X amount of dollars in there for working capital. And the client brings me that pre-qualification. I tell them every time that's not the working capital number. You're going to tell me what that working capital number needs to be. whether it's permanent working capital, or whether we need to include a line of credit, because you're going to do that due diligence that you go through, that other stage that Adam's talking about. That's crucial in what you do to provide us that business plan and what you're going to need to operate that business and grow that business. So that's really, I put that back on the borrower's due diligence to provide us that information. And you know, working capital, you know, we can provide whatever is necessary to operate. I mean, it definitely needs to be within the realm, but we're not going to provide, you know, or we don't want to undercapitalize you getting into a business, but we also want you to bring it to us and tell us how you understand this business works. And that all relates back to the projections, the assumptions. I've underlined that because those are just as important as the projections, because that gives us details behind your numbers. And if anything's going to change from the current operations. Underwriters, understand this. Don't get scared when underwriters ask a lot of questions. If it's gotten to this stage and an underwriter has a file and you're working with an experienced lender, they're not going to head you down the wrong path unless something comes up that no one knew about or whatever. We're all in this together. We know it takes too much time to put these things together. So, you know, when an underwriter gets a deal and they send you 20 questions, you know, I flip it over to them. I put my comments on it, and I say, you know, some stuff we overlook here and there, or we just need more clarity on. But that's okay, because that's what underwriters get paid to do. They get paid to, you know, scrutinize a deal, and that's okay. Typically, they're going to go through the questions. They're going to go through it. They're going to keep underwriting. Then towards the end of the file, they're going to get on the phone and do a borrower interview. To me, borrower interviews are great. I kind of wish we did them on the very front end on every single deal. That allows the borrower to sell themselves on the deal. That's why I think that bio is so important. Sell yourself on why you want to buy this business, why you're a good fit for this industry. It is crucial to what we do. And that goes into the business plan. Put that in the business plan and sell yourself. And that helps with the entire approval process that we have. If we're this far down the line, you know, we say approved, denied, you know, or modification, we're typically not going to decline a loan at this stage of the game, okay? I mean, it's an approval. You've received a term sheet from the lender or a conditional approval letter, so you know what the deal looks like, you know, high level. There may be some modifications to the transaction down the road. Maybe a working capital need, maybe a little bit of structure or something we found out. But at this point in the stage, we spent this much time, and you know, an underwriter spent 10 to 12 business days to underwrite the deal, issue a commitment letter. We should all be on the same page. Your stand should be talking to you about the process of where underwriting is and that sort of thing throughout the process. So shouldn't be any major surprises at this point. Adam, anything you'd like to add in?
No, I was just going to say my only comment to borrowers and buyers is that you're going to have a lot of checklists, and lenders have checklists. We have checklists. Attorneys have checklists, due diligence checklists. There's just all kinds of checklists going on. And this is a marathon, not a sprint. You've got to have patience. The banks always want more documents. The lender, the buyer, you know, the attorneys always want more. There's always more documents. There's just always documents. And so you just have to pace yourself. That's one of the comments that I just wanted to make here. It is a lot of paperwork. But again, these loans are fantastic. They're largely a transaction involving a lot of goodwill that you're just not going to get from a conventional lender. And so there's going to be some extra hoops and extra paperwork. And trust me, it's worth it. These are SBA loans, to me, are the best deal going for a buyer. No doubt about it. Okay, so we're about to get a commitment letter, and then we're going to get a new checklist. We're going to get a closing checklist. You're going to probably bring in the lenders have specialists that just focus on closing. So talk a little bit about this, Stan. And again, for those of you who have questions, please feel free to put them in the Q&A or the chat.
You know, guys, at this point in the stage, you've invested all this time, you've identified a business, or, you know, that's taken a while, you've worked with the lender, you kind of got to a stage, you've gotten approved on your loan, and now you're kind of down to the final wire of, okay, now let's get this thing closed. Everybody wants to close yesterday. It doesn't happen that way. There's these additional checklists, additional items that we have to focus on. This is where a dedicated SBA shop is going to bring in a loan closure. Okay, and at this point, The file's going to kind of get handed over to your loan closer, and that loan closer is your best friend, okay? Because they are between you at this point of approval and you taking over that business and, you know, taking over and closing out the transaction. So that closing check, the closer is going to provide a closing checklist. I typically provide a pre-closing checklist while the file's in underwriting, so you can begin working on that on the items that take a little bit longer. One of those items is what we call the 4506C, that's so that we can verify the tax transcripts. Right now, IRS is taking way too long. They're like 4 to 6 weeks out. So if I'm working on a transaction, that's one of the first things I have my borrowers. I say, I get the seller to sign the bottom of it. We'll fill out the information. We'll get the 3 years of tax returns. We'll take care of that. There's some services that are kind of cutting down on the time frame on that right now, and everybody's getting on board with that program. But it's, again, we're dealing with the IRS. They're slow, and you know, it's causing some issues. So all we can do is be proactive, get that information on the front end. Pre-closing checklist, maybe even when I'm getting the LOI, or if I've even pre-qualified a business with the business advisor, I'm obtaining that information on front end. Very crucial right now. Organizational documents, as I mentioned before, these are crucial to the SBA loan as well. That drives everything. Everything we put into the SBA E-Trans system, that's the system they use, that drives everything that we do. So the earlier we have that, the better off we are. The tax ID number and the articles are one thing. Operating agreement and bylaws are required on all SBA transactions. Some folks say, well, it's a single member LLC. I didn't create an operating agreement. Doesn't matter. We'll give you a template, fill it out, send it over, we'll move forward. Item that is working, probably been working together while we're underwriting the loan and you went under LOI, is the asset purchase agreement or a stock purchase agreement. And so your attorney, seller's attorney, or dual agents, they're working on those items to get those kind of narrowed down. Lender needs those. They need those in their final form. They don't technically have to be signed prior to closing. They can be signed at closing, but we have to have final draft so that we can create all of our loan documents, you know, and move forward, you know, to closing. Because an SBA lender typically has a bank attorney to review all documents, to prepare all documents. That's just how the program works. They work with your attorney, seller's attorney, to coordinate the closing along with your loan closing. Again, best friend, don't forget that. Insurance requirements, property, liability, life insurance. You know, an SBA lender is going to bring life insurance in way sooner than this, where we talked about it here. We're going to talk about that during the LOI stage, because if we're financing, you know, $1 million in goodwill, it's unsecured. You know, again, it's a large amount of unsecured exposure. The bank has to have key man life insurance on that individual purchasing. So they're going to bring someone in. Most lenders have dedicated life insurance agencies that can do a quick close or provide a quick close policy. So they'll turn that out pretty quickly. You know, we as a lender, if we use one of our preferred lenders, it's a lot quicker, faster. It's one less thing for you to do on the back end. Yes, you go out and get your physical, do all that, but all the back end paperwork comes to the bank.
Stan, we got a question from one of our viewers today, and they said, when you get a commitment letter, are odds pretty high that you're going to close?
In my world, I would say you're probably hitting 9 times out of 10. I mean, there's always something. I mean, I'm a little bit kind of, you know, there's always something. And in my world, I always say the loan's closed when the wire leaves the bank. That's me, you know, because I've been in this business way too long and everything's happened with me in my career. But I will say, if you've got a commitment letter, everybody's working toward an active goal, you're going to get there. Okay. And so I'd say 9 times out of 10, yes, you're solid. You know, if the business evaluation's not back and those are off, but if you're working with a business advisor that's been around, they typically know where to price these things. They don't typically have issues with values. And so that's, you know, that's important to you, you know, as well too. So hopefully that answered your question.
Yep.
Adam mentioned this earlier in the presentation here. Background checks on all guarantors. There is a document that you sign with an SBA loan. It's called a 1919 form. It has 3 questions on there, and it asks you, basically boils down to, have you ever been arrested? Okay, and that means ever. So if you've been arrested and you didn't, it was not you, you were falsely accused, you still were arrested. You need to mention that in the form. And it's not fair, it's not right, but it happens. DUIs are arrested. Underage drinking in college, you are arrested. It was 20 years ago. We don't care. You still have to provide that information. You check yes, it's not going to decline your loan. We just have to have an explanation for it. Now, if it's a felony, then that may be an issue because we have to send those to Washington. We have to clear those internally ourselves. So that's a little bit different situation. But, even anything, I found this out, anything on the boat in the lake, if you get a ticket for wake zone, that is actually a misdemeanor in some states. I know Virginia it is. Maybe it's North and South Carolina as well too. So, and you may not know that, and that's fine. We have folks, once we do the background check, we do what we call a LexisNexis report. It's pretty, fairly inexpensive, gives pretty good detail. It gives some detail, then we have to research the other detail. But if you got a clean record, just put it on there. Driving too fast for conditions, it was a misdemeanor. That's fine. Bam. We'll get it clear. It's not an issue. But just be upfront with those things. Bankruptcies as well. We can research those. They've been discharged. We're good to go. That all can be worked out as well too. If you had a bankruptcy in the same business that you're trying to purchase last year, that might be a problem. Okay. So just, that's something that's going to come out in the pre-qualification stage. Business evaluation. As soon as I get, a term sheet, and I issue a term sheet to a borrower, we're moving forward and we have an LOI, I will order a business evaluation on the front end. Let's get it out of the way. They cost $2,500. They take about 10 business days. If you're going down this path to buying a business for $1 million, $2,500 is nothing. Some transactions include real estate, environmental reports. The real estate's involved. Appraisers are taking a while. They're 4 to 5 weeks out right now for us to get a basic commercial real estate appraisal. So we would want to order those very far in advance. Environmental reports, probably about 10 days. That's not as crucial unless there's concern. But these are the things that we're going to go through with the checklist. You have a dedicated loan closer that's going to walk you through, provide updates they may not provide you an update on the weekly. They may provide you 2 updates a week if you are providing information. If the information is coming in, a good loan closer is going to provide you an update with that as they come in. And really, it's, the great paper chase to get it to closing. I mean, that's what it's all about. Coordinating with the attorneys, the business advisors, buyer, seller attorney, brokers, anybody's involved. Everybody's working towards a common goal to get you closed. It gets a little, crazy there towards the end, but trust me, everybody's in your court to get this thing done.
So Stan, one last question before we go into the 5 mistakes, and I didn't preview this question with you, but can you explain if we're trying to close on the first of the month, SBA lenders typically want all the documents, everything in final form 5 days before that. There's a review process. Talk a little bit about what goes on in those 5 days. So really, everything's done, but the lender needs 5 days. Help us understand what goes on in those 5 days before the lender says, yes, we're going to close on the first.
If we have a hard close date, we got to close on the 1st or we got to close on the 30th. Everybody's working towards that common goal. We're going to tell everybody that 5 days prior to that closing date that we need to have every single thing in the file. Now, does that mean we're missing one item we know it's coming in? Or are we just going to say, no, we can't close on the 30th? We're going to be flexible to a certain degree, okay? So just understand that first. But within that 5 days, what we have determined over the years is that you do not want to rat race the day of closing. You don't want to put closing documents together 2 days prior. You're working out, typically in a transaction such as this, a change of ownership transaction, business acquisition, you have a seller's attorney, a buyer's attorney, a bank attorney, you got a business advisor, you got the bank, all these parties involved to get you to the closing table. And everybody's working towards that common goal, but to have a smooth transaction go well, you need those 5 days. I think 5 days is good. 4 days, you can probably get it done too. But the bank is taking all that information, They're doing their final post-closing, review prior to closing, or pre-closing review, so that they know that everything's in the file, it's ready to go, coordinating with the attorney, you're coordinating times, you're coordinating logistics, your people are coming out of town, all of that. So because that 5 days you may be closing, that morning, someone may want to review the documents prior to. The attorney working on their fees and so forth to put on the HUD statement. There may be an inventory count that's going to occur, from the business advisor side is probably going to coordinate that. So there's a lot of moving parts. So it's really to make a smooth transaction go very smoothly instead of being a rat race and something coming up at the last minute, no one's reviewed documents. What is this? What is that? And it does, at the end of the day, it works.
Yep. Yeah, I knew that. I just wanted potential buyers out there to understand, when they get frustrated, they say, look, we got all the documents done. Why aren't we closing the next day? And it's really the lender doing a final close review, make sure everything is in place so it can be closed. Before we go to the 5 mistakes to avoid, go ahead. Go ahead.
Oh, I was just going to say, I'm going to speak for the bank side of this. Your loan is not the only loan we're closing that week.
Right.
Okay.
Right. A lot going on. We did get a question here, and a listener today is asking, can you get the 3-year tax request as part of the pre-approval before selecting a business? So can they send you their tax returns before they've selected a business so they can get pre-approved, is how I interpret that question.
Well, I'm not sure if they're talking about tax transcripts. Are they talking about tax transcripts?
I'm just reading. It says, can you get the 3-year tax request as part of the pre-approval before selecting a business? So I'm assuming they're talking about their own personal tax returns.
Yeah, we can't, but we typically don't have to prepare a tax transcript, the 4506C, on the individual. We're only really looking for the business side of that. That's where we need to verify that the seller's tax returns are true and correct or what were reported to the federal government.
Okay, great. Well, let's bring it home, Stan. 5 biggest mistakes that you see buyers make over, you've funded probably hundreds of millions of dollars of transactions. And, what are the mistakes you see? Talk through these.
Yes. Well, first and foremost, that's kind of why we went in and basically why we're having this webinar today. Not pre-qualifying, the buyer from the very beginning. I mean, just going into it, just saying, hey, I'm going to go here. I mean, you got to pre-qualify yourself. You got from a financial capacity, as I've talked about, and from your background. And that's the background part, is the subjective part. We can look at numbers and say, okay, really easy, you can afford this size of business. The subjective part is the background. What do you have, that kind of you can bring to the table and is transferable with this business. You talked about it too, Adam, not having the tough conversations up front. When we're talking about that LOI in my process, I ask the bar, I don't pull credit on the very, very front end. No one wants to credit pull all day long. But I say to them, how is your credit? And if they say there's an issue in the past, then that's when we need to pull credit. That's when we need to do our research on the front end. If they say, Stan, our credit score is 750, never has an issue, we're clean, then okay, I'm going to take them for their word. We're big boys and girls here. I have to take you for your word, and that's what we're going to do. If it comes back different than that, then that's on you. That's not on the lender, and I can pretty much remember those conversations. Timeline expectations. That's one that can always be a moving part. Yeah, right. Like I talked about, yes, you got your LOI today, but it took you, 3 weeks, 4 weeks to get me the application. It took you 3 or 4 weeks to get me a business plan. I do have a company out there that will help you with the business plan if you need help. I mean, they're going to charge for it. It's not cheap, but if you're too busy, you can't get to it, they will give you a checklist and you fill it out, and they'll kind of go from there. That I talked about it also today during the webinar, doing your own due diligence. I mean, really discovering what this business is all about. So many times, I get the other end of the call of the borrower telling me, Stan, we found out this today, really good. They just want, a huge account, and we're going to get the windfall on that, or saying, it may be the opposite. Maybe it's a little bit negative or whatever, but, that's part of the process. that's part of the journey that you go through, looking through this business to make sure that you've done all the research for this, this new life that you're going to take on. So it's crucial, in that. And number 5, I'm going to leave that one. I'm going to throw that one back at you, Adam.
Yeah, well, I would just say, get your advisors involved, whether it's your lender, a CPA, an attorney, a business broker, an investment banker, your family. You not only should you get them engaged early, but you got to listen to them. You gotta trust these people, and you got to get the right advisors. You don't want to go to a attorney does DWIs. You want to get, or your next door neighbor who's an attorney, get a transaction attorney. Just like Stan talked about earlier, you want a commercial lender with SBA experience. You don't just want to walk into the XYZ bank and say, I need to talk to someone about taking out an SBA loan. You need to find the specialists that focus on this, the transaction attorneys, the CPAs that are used to doing this, the lenders, the business brokers, the advisors, because it makes a huge difference. These are not insignificant expenses, and these are, in terms of buying a business, you don't want to make $1 million mistake. And I sort of, watch people say along the way, well, I don't want to call my attorney. It's going to be another $300. That's why you have an attorney, saving you, tens of thousands or millions of dollars. We've had plenty of people that don't want to use their attorneys, and then they realize that was a huge mistake, or they don't want to rely on their CPA, and they realize, wait a minute, these books aren't what I thought they were. Well, they didn't consult with their advisors. So I can't stress enough, get them involved early. I should also have added to this, and listen to them, because they know what they're doing. They're there to protect you and to work with you. So these are some great mistakes over all these years that Stan has seen all these transactions. We've gone over the questions. I want to leave you guys with Stan's contact information. Again, Stan is a wealth of information. He's done a really good job of not tooting his horn. So I'm going to end by saying Stan is as good as they get. He's a personal friend, but he's also a business person that I enjoy working with, but also enjoy recommending. And it's great to have local professionals that you can refer people to and feel like you can trust them. So Stan, this has been a lot of fun. Really enjoy your knowledge, education. Hopefully, if people have any questions, they'll reach out to you. They reach out to me. If you didn't get Stan's information, feel free to reach out to me. This has been recorded, so this will go up on our website soon, and you'll be notified once it's up. If you want to watch it again, or if you want to share it with someone, a spouse or someone you want to buy a business with, this will be up on our website soon. So Stan, thank you very much for your time and your knowledge. Really enjoyed it. For those of you who have watched live or in the future, really appreciate your time. And hopefully this has been helpful. Thank you all very much.
Thank you, Adam.